All right, welcome everybody to the client support webinar for July 5th, 2023. Hope everybody's doing okay. I think the audio, is working okay, so hopefully that's good. All right, Jean, any comments you want to make before we get hitting it here?
Well, welcome everybody. Hope you all had a terrific July 4th. And to let us know that you can hear the audio and see the webinar screen, it'd be great if you could locate the questions area in the control panel and just say hello and A-OK and all that good stuff. Hey there, Alexander. Good to see you. And I think I see Jim Blue and Lewis and Lowell and Sergio. Good to see everybody here. All right, well, Bennett, back to you.
All right, well, thank you. Okay, good. Good to have you here, everybody. All right, so this is a webinar that we do every week, and it's for you. All right, so any questions that you have, feel free to type those in the questions area. That's how I'll see them in the webinar console. And let me just go through a few administrational items and we'll get started here. First thing I have to talk about are the risks involved in trading. There are risks. It is possible to lose some or all your money trading the financial markets, or even investing in the financial markets, or even investing in real estate for that matter. It is possible. All right, so anytime we take any type of risk financially, it is possible to be on the other side of the coin. We don't want to be, but sometimes we are, right? All right, so that's one thing. Also, past performance does not guarantee future performance. And if we look at any stocks or talk about some ideas here that may affect you, please run those by your financial advisor or whoever manages your money to be sure those are suitable for you. We don't know your personal situation, they do. And there's many factors that go into that type of determination. We also want you to trade with risk capital, money you can afford to risk. So fund your accounts with risk capital and know how to do risk control on each and every trade. That's where we can control our risk when we do risk control. I can help you with that. I've got several books on money management that are excellent in that area. My newest book, The Art of Trading, is coming out at the end of this year. It's going to have a ton of new information in it from the original one that came out in 2008. So I'm pretty excited about that. And that's being published by Wiley, and then McGraw-Hill published our Elliott Wave Technique Simplified book, and Wiley also did the Survival Guide for Traders. So there you have it. And those links are available on our website to order, or Jean can put one up in the chat area too, along with a link to our software. We have a variety of different software tools, which is probably why you're here. If you have any questions on how to use our software, please feel free to suggest that. You know, we have charting software, we have scanners, and we have risk control software. So we kind of cover the gamut on that. All right, so let me come out of here and let me dump that. And this happens to be my TradeStation setup here. All right, so Alexander's asking a question. What does a yellow triangle mean, and what is an MP and NP pivot? Good question. All right, first of all, what platform are you using, Alexander, and what color are your charts? Because I have black backgrounds, I have all sorts of different backgrounds here. So when I answer a question, I kind of want to be able to use the same type of thing you're looking at there, you know. Black background, TradeStation, perfect. Okay, so what I've got here is pertinent to what you're looking at here. Okay, great. All right, couple things. And I understand you are new for the art pyramids, as you just purchased them this week. So great, congratulations on getting those, by the way. You'll love them, okay? They really round out your trading, will help you a lot. All right, so couple things. Let's see if we can find one on one of these charts. I don't see any yellows here. All right, so let me just see if we can go back in time a little bit. Pretty much those are all confirmed. Usually if you're looking for a yellow, it's got to be up front because chances are they were either confirmed or not. Let me see if we have any on the M2K down here. Just run over a couple of these things here, because you can get a yellow pyramid on all time frames. Okay, perfect. All right, here we go. So we got one right here. Okay, so that's what you're referring to. So when we think of a yellow pyramid, first of all, you can change the color on that. All right, sometimes I have them blue if I have a white background because they're easier to see. The normal default is yellow, and here they are over here too. So two places on this chart where they're forming two different time frames. So the time frame doesn't matter, whether it's an intraday or an end of day time frame, no matter whatsoever. So a yellow pyramid is considered in what we call an unconfirmed pyramid. Okay, it's a pyramid that's forming, but in order for it to be confirmed, prices have to pass past the point of the triangle. So notice the points of the triangle always point in one direction or another, either up or down, right? So you got some up here, you got some down here. So basically, if prices go over the point, for example, on this chart on the far left over here, this is going to turn red and be a P pyramid, right? Because at that particular point, it's pointing down for a downtrend. So that's a bearish pyramid trading point. Let's take a look at this one over here on the far right here. Let me just spread this out here. Give me 1 second so you can kind of see this good. All right, notice we've got two forming here and one here, right? So once again, you can see why they're yellow, because prices haven't gotten above the points of any of these, right? So that keeps them yellow. As soon as the points are passed, then they form a particular, let's say, color, either red for bearish or green for bullish. And so notice we have ones right here. This is kind of cool when this happens, because what the art software is doing right there is it's isolating a channel for you. So the market's moving sideways, and it's basically saying, okay, if we break above this pyramid, it's bullish. If we break below this one, it's bearish. And so it kind of is pretty cool to be able to see that, because it's really kind of setting you up for either a break to the upside or a break to the downside, depending on which pyramid is confirmed. And so it's isolating the support and resistance levels of that particular channel, right? So kind of cool. Notice this one too, larger, but the point will not be passed until it gets above that level. All right, so you'll actually get an earlier entry off these pyramids. And the reason why we still keep this one here is because we like to count how many pyramids in a row in a certain direction we have. And the reason for that is because we look for trend exhaustion after 4. So after 4 direct pyramids in a row of the same color, what happens is the trade becomes more risky. All right, so just keep that in mind. And we don't like you to add into trends after 3, okay? You can on the 3rd, but that's the last one. All right, the next question is so let me know if that answers your question, first of all. And don't forget, when you see one forming or one that has formed, the software also has gone into the momentum part of the formation of that pattern that's creating the triangular possibility, and looking at it to see if the momentum is sufficient enough for a high probability pyramid trading point to appear in the first place. Okay, so momentum is taken into account. All right, so before I go any further, Alexander, does that help you? Okay, does that explain what a yellow triangle is? So it's an unconfirmed pyramid trading point. Now, it is possible, if prices go below the flat part of the triangle before going above it, that the triangle will disappear. Okay, so that triangle has to remain intact on the lower part, or the flat part. Flat part can be lower on a bullish pyramid, higher on a bearish. But as long as prices don't go on the other side of it, the pyramid will stay yellow until the point of the pyramid is taken out, and then it will go either green or red. However, if prices go below the flat part, it will disappear, because that is a cancellation of the signal. All right. Now, I'll say again here, because I think I mentioned this already, when you have two pyramids side by side, Alexander, okay, that is basically saying the market is in a channel. And so the top of the channel is here, and the bottom of the channel on the pyramids is here. So what it's doing is it's very nicely isolating the channel for you. So if it breaks down and sells off, the red one will turn, the one pointing down rather, will turn red. And guess what? Because when that happens, prices will also be going below the bottom of this, that pyramid will disappear. So you'll only see a red pyramid to the downside. However, if prices reverse and go back up from here and go above this one, all right, this one will turn green and be a P here, and this one will go away as soon as prices get above the top of that part, okay? So that's how they kind of work. Okay, cool. Great questions, okay? Great questions. All right, let me answer some of the other parts of your questions. Sergio, I'll get to you as well on your dots, okay? All right, so the next question is, what is an MP and what is a P pyramid, right? All right, so let's take a look at that. I'm going to bring up a whiteboard to help us with that. So when you have, for example, let's just choose an uptrend. Okay, we can look at a downtrend if you'd like, but let's just say an uptrend occurs. And then we get a movement up here, all right? It takes three pyramids, three price bars rather, after a support level here for the calculations in the pyramids to determine if there is enough momentum in that price pattern to even bother forming a pyramid trading point. All right, so that's what it's looking. So a lot of times you'll see a pyramid form, okay, only after, you know, you've had two, and then on the third it will form, okay? And if it does, it'll look something like this, right? Now, we're measuring the momentum on this side. This is stuff you don't see going on when the pyramid forms because it's all in the background. This is part of the calculations that are running in the background that form these pyramids. It's looking at the momentum on the left side of the triangle, measuring it against the momentum here, and then again it's looking at the momentum here. All right, when it gets to the third price bar, it determines if the momentum calculations determine for it to form in the first place, because it's looking for sufficient momentum here as compared to here and here. So it's all part of a calculation. So that's why you can see at times certain movement up and no pyramid form. And it's because it failed the momentum calculation, right? So just because you see this kind of pattern forming doesn't necessarily mean a pyramid will form there, because it may miss the momentum calculations. But if they're there, then it will form. And then it will turn when it gets here. Now, one more thing, and then I'll get to the difference between an MP and a P. One more thing you should be aware of is sometimes, okay, you get this. And the third pyramid comes after the point is already reached. In other words, it's like a breakaway market. So in this case, the pyramid's not going to have time to go yellow. It's just going to turn green if the momentum works out, and prices jump above the apex. It's not going to have time to turn yellow. It's just going to turn green right away. All right. What you have to do at that point is then do your risk control from wherever you can get in terms of entry versus exit, okay? So sometimes that does occur. It doesn't happen often, but it does occur, okay? All right, so now the next question is, what's the difference between a P pyramid and an NP? Well, let's say you have a move up here, all right, and you got a pullback. And then you have a move up here, okay? And this forms as a P pyramid, okay? Then you have a move down here, okay, like this, and you have something like this, and you get a pyramid in here. That's going to be an MP. And the reason for it is that price, the apex here, when prices clear the apex, it's above the flat part of the first pyramid designated as a P pyramid, because that's where your stop's going to be. So how can you have an entry here if you're already long here and your stop is here? So when you think of a P pyramid, think of that as your primary trend, and a minor P pyramid as your minor correction inside a primary major trend. And that's what'll form when the apex is above the stop on the most recent P pyramid. Now, if you had a situation where you came up like this, and then down, and then up here, and this was a P pyramid here, and then you had a situation where the market just fell out of bed, okay, and you had one form here, that's going to be an MP. But if the market goes down further, forms here, that's going to be a P. And you would have been stopped out on this pyramid here, but the apex is below this and you're already stopped out at that point. So this would be a short trade. Okay. So the determination of an MP versus a P is always the relationship between the point of the current, the point of the MP versus the base leg or flat part of the dominant P pyramid. So we call this flat part, by the way, the base leg. Okay. Now, is that clear? Okay, good. All right, cool. Very good questions. That's exactly what client support's for. I am so glad you're here, and I'm so glad you asked that, because I can guarantee you other people have the same question. So, and you let me know if that's not clear, okay? There's no such thing as a bad question here, okay? All right, so the next question I'll get to is from Sergio, and Sergio asked, what do the dots indicate? And he's referring to, I imagine, these dots here on the chart, right, Sergio? You know, like the 2Bs and the 1Bs, they all have these little dots. The dots occur over what we call the signal bar, all right? And once again, I'm going to use a whiteboard for this. So when we talk about 1Bs and 2Bs, okay, which is part of the art software, right? We're really talking about high probability pivot points, all right? Not all pivot points will form a 1B or 2B because, again, the software is taking into account information from the previous 3 bars before the actual pivot occurs. And so things have to happen that's proprietary. I won't tell you, but it involved a lot of testing, was involved in determining what pivot points were more powerful or significant than others. And so when they are, then they get a 1B or a 2B with a little dot like that, right? So on a 1B, all right, let's say you had a move up and then a reversal and you had this here. This was called a 1B, okay? So the little dot goes over the signal bar, which is this bar. So the entry is actually, let me just erase this. The entry is not taken yet, okay? It's not taken yet. It depends on what happens on the price bars after the 1B signal bar is basically detected. If prices go below the low of the signal bar, then this is confirmed, and that's an entry for a scalp trade or a pivot point trade, okay? If, on the other hand, let me erase that. Okay, if, on the other hand, instead of going below, let me erase this, instead of going below, if prices go above it, then this voids out the signal, and this usually turns white or blue, okay? Meaning it's voided. So that signal basically is no good anymore. All right, so that's a 1B. And so that's why the dot is there over that one price bar. Now I'm going to erase all this. Now I want to talk about the 2B. So let's say you were coming up here, and we have bullish and bearish ones, by the way, but the same theory applies to both. Let's say you have something like this, but then you have something form here, and let's say this price bar is bearish, okay? And I should have mentioned this earlier. You cannot have this as a 1B because this price bar is bearish. It has to be bullish, okay? I mean, vice versa. It cannot, this could not be, I'm sorry, this could not be a 1B because this is bearish. This could be a 1B because it's bearish. But when we talk about 2Bs, all right, if this was like this, then this could not be a 1B. I'm sorry about that. All right, I was like a couple steps ahead in my mind. All right, so this cannot be a 1B, a bearish 1B, because it is bullish. So you cannot have this. This can only form if the price bar was bearish. Okay, so on a situation for a 2B, all right, if this is bullish, but this price bar is bearish, then the dot forms over this price bar, and this becomes a 2B. And the signal for entry is one tick under that. Now, the reason we call it a 2B is because this price bar is the first one, this is the second one. So the second price bar becomes the signal bar for the entry. But the stop, we always want the stop at the high of the pivot. So we need to use the first price bar for the stop up here. So it takes into account two price bars, and that's why we call it 2B for 2 bars. Okay? All right, so that's kind of how that works. No, the second price bar here, all right, has to be bearish.
But I think actually he means all these signals can be either bullish or bearish.
Oh, yeah.
I think that's what he means.
I see. Thank you, Gene. So let's redraw this, okay? Let's go in a downtrend. All right, so this could be, give me a second. This could be a signal bar called a 1B. And if this price bar goes above here, that would be a bullish. This would be green in color because it's bullish. So bullish signals will come at the bottom of bearish trends. And likewise, if this is a bearish price bar here, then you can't have a bullish signal. So this would not exist. But if the next price bar was up here like this, then this could be a 2B, and the signal entry would be here. So that's why this would be red in color. So now if we go back to the chart here, that's why you see these 1Bs green at the bottom of the pivot. And at the top of the pivot, you'll see 1Bs and 2Bs, because those are bearish signals coming after the bullish move up ends on a pivot. And usually with the 1B and 2Bs, you're good for 2 to 5 price bars in that direction. So a pivot point does not necessarily mean a change in trend. It just means profit taking. And so usually it's good for 2 to 5 price bars in the direction of the break. Okay, so if it breaks, if it's a bearish 2B or 1B and it breaks to the downside, you're probably good for 2 to 5 price bars in that direction. However, if it gets voided out and prices go higher, all right, it's probably good for 2 to 5 price bars in that direction as well. Okay, cool. All right, is that clear? Crystal clear. Good, excellent. Good job, guys. And you get this also not on TradeStation only, but you also get it on NinjaTrader and all our platforms. All right, cosmetically, we draw a little box around here, the 1B, and here's the 1Bs down here, and then we have 2Bs you can see over here, and we draw a little box around because that's what NinjaTrader requires us to do. So it's a cosmetic thing. Okay, some platforms have different cosmetic requirements, but the signals are exactly the same, the coding for the signals. All right, so you guys good on that? Those were great questions. All right, well, guess what? That took a half an hour, so that took up our client support time, which is great, because I was going to cover some of the art software today anyway, because I know we have a lot of new users. So what a great bunch of questions you guys asked. Fit right into what I was going to cover today. And if anybody else has any other questions, feel free to ask.
Hey, Ben.
Yes.
I have another item that might be helpful to cover on your whiteboard. You know how you were talking about a bearish signal bar or bullish signal bar? You determine bullish and bearish differently. Is that correct?
Yeah, that's actually a very good thing to talk about here. I only got a minute or so left, but this isn't tough to discuss. So yeah, let's go over that. So,
Okay.
you know, when you load the art software on any of the charting platforms, it's 3 studies, okay? 1 study on TradeStation, 2 of the studies are indicators called art pyramids and art reversals, right? And then on TradeStation, you have a paint bar study, and that's called the color bars, which is what Gene is addressing. On NinjaTrader, okay, they're all considered indicators and they're just put on as 3 indicators. So the art software really consists of 3 studies: the pyramids, the reversals, and the color bars. And Gene's question is directed towards the color bars. And so what I did is when I created art, one of the things that I found in my testing is that a much more reliable way in deciding whether a price bar was bullish or bearish was how it closed in relation to the length of the price bar. Now, if you look at normal charting packages, okay, usually, and whether this is a candlestick or not, it doesn't matter. I'm just going to use an open, high, and low and close price bar. Usually the open is a step on the left-hand side and the close is a step on the right-hand side. And on most charting software packages, as long as the close over here is above the open, it's a bullish price bar, right? Likewise, you know, if the open and close is like this, where the close is lower than the open, then that's a bear, right? And then usually if it's right here, that's a neutral, the open and close. All right, now I'm going to call this normal. All right, if I can write on here. Okay, now this is the way art does it. Okay, so let's say you have a price bar, right? And let's say you have a situation where you have an open here and a close here. Now, if you were using the normal way, this would be bullish, right? Because the close is above the open. But when I do it on art, what I noticed is if the close closes below 50% of the entire length between here and here, then think about it. If you opened here and the bulls pushed it way up here, guess what? If they can't keep it on the upper half of the price bar and the bears come in at the close of the price bar and close it 50% lower, then that shows the bulls failed at keeping it up here. So the bears were in control at the close of the price bar. So therefore, I would label this as a bearish price bar, not a bullish one. Is that clear? Okay, and that's one of many examples. Now, if it closed here and here, like over here, then I would do the same thing. I would classify that as a neutral, all right? Now, back to this for a minute. Look at this price bar. Let me just erase this for a minute. Wish they had a bigger eraser, but okay. All right, let's do that. Think about that. If you had a price bar this big and it looks something like this, that's a bearish price bar. I mean, just looking at it, you can tell, right? So there you have it. Is that clear? And vice versa for a bullish one. Now, for example, on this price bar here, my system would also label this as a bullish price bar, but not because the close is above the open, but because the close is on the upper 50% of the price bar. So basically what I care about in labeling a price bar bullish or bearish is the close in relationship to the 50% mark on the price bar's interval, which is the distance between the high and the low of the price bar. Okay, great question. Jeannie, I'm glad you brought that up.
Yeah, I've always thought that was an important distinction that you see differently than other charting packages, and I think that's really helpful.
Okay, so that kind of thing. So you know, and I guess this is what's important about this as well is when we think of the 1Bs and 2Bs, maybe the ones with the dots. All right. Remember I said the price bar has got to be bullish or bearish. It's bullish or bearish on how we do it, not on how the normal people do it. So you could have, you know, a price bar like this, and we would make that a bullish one, and you could still get a bearish 1B there because, or you could not get a bearish. You would get a bearish 1B because this would be a bearish bar, not a bullish. Okay. Because even though this looks like a bullish price bar in the normal way charting packages do it, we consider this a bearish price bar on how we do it. So a 1B, a bearish 1B could form because this is a bearish price bar. Okay, so that's a big important aspect. So Gene, I'm glad you brought that up. All right, let me just see if there's any other questions. Good stuff. All right, Bennett, this is from Jim. or James, do you see an advantage to using bars instead of candles? I think that's kind of a personal situation. Now, if you have a candlestick charting platform that you're using, like an independent third-party vendor, and they are coloring the candles based on something in their candle studies, then you may want to use those. But if you load ours on there, it may override theirs. Because I know, for example, let me just get rid of this. If I switch to candlesticks here, okay, that's just changing it to candlesticks without having a third-party vendor do it. Then there's no code to overwrite. It's just going to use the art color bars to candle the candlesticks, color the candlesticks. But they'll be colored in the same way art wants to do it. But if you're buying somebody's candlestick programs, sometimes the art color bars do not override their code, okay? So it depends on the vendor, I guess, and what they allow and don't allow. In terms of what's better or not, I prefer open, high, low, and close. I just always been that kind of person. But there's a lot of people that we have that use candlesticks and love them, and I get that. So you could use either or. Now, I did a seminar with Steve Nissen, and we combined the art system with his. And it was a great webinar. We did it years ago of how you could use both art and candlesticks together. All right. And so if you like using those, you can do it. So there's no right or wrong. Okay. It just is whatever you want to use and feel comfortable using. Okay. All right. Frank, did I answer your questions? I think I did. I'm seeing yes. And hopefully, Sergio, I answered your question because it's going to be dependent. If you're using in TradeStation, if you're using just their regular candlesticks and not a candlestick indicator, then the art color bars should change the color on that. Okay. Okay, good question. Excellent. All right, this was a great session. Very good to cover all this stuff. A lot of good stuff on this. All right, so next week, I thought I'd go into a few things. I get a lot of questions on how to turn on and off the voices, the sound technology and the art software. So I thought I'd go over that next week. Okay, but this was good for this week. Good information, but definitely come next week, especially you new folks that are using the art software. So we'll cover some new things in there as well. Okay. All right. Well, thanks everybody, and short week this week, right? Okay, gotta love that. And we'll see you back here next Wednesday. So enjoy. All right, thank you.